This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Iran's unprecedented missile and drone strike on Israel is unlikely to prompt dramatic sanctions action on Iran's oil exports from the Biden administration due to worries about boosting oil prices and angering top buyer China, said analysts. Shortly after Tehran launched its weekend attack, retaliation for Israel's suspected April 1 strike on the Iranian consulate in Damascus, House Republican leaders accused President Joe Biden of failing to enforce existing measures and said they would take up this week a series of bills to sharpen sanctions on Iran. Speaking to Fox News on Sunday, Representative Steve Scalise, the number 2 House Republican, said the administration had made it easier for Iran to sell its oil, generating revenues that were being used to go fund terrorist activity.
U.S. President Joe Biden will do what he can to ensure affordable gasoline prices, White House senior advisor John Podesta said at an industry conference on Tuesday, when asked about future releases of crude oil from the Strategic Petroleum Reserve, SPR. The Biden administration in 2022 sold 180 million barrels of oil in about 6 months from the reserve, the largest ever SPR sale, in an attempt to lower gasoline prices after Russia invaded Ukraine. Republicans slammed the sale, which helped push levels in the reserve to the lowest in about 40 years.
Moving on to the top news in the energy sector.
Oil prices extended losses in early trade on Wednesday as worries about global demand due to weak economic momentum in China and a likely rise in U.S. commercial stockpiles outweighed supply fears from heightened tensions in the Middle East. Brent futures for June slipped 56 cents, or 0.62%, to $89.46 a barrel by 0337 GMT. While U.S. crude futures for May fell 63 cents, or 0.74%, to $84.73 a barrel. Oil prices have softened so far this week as economic headwinds pressured investor sentiment, curbing gains from geopolitical tensions, with eyes on how Israel might respond to Iran's attack over the weekend.
The U.S. will create a new trade task force aimed at reducing carbon emissions from global commerce and manufacturing, White House senior advisor John Podesta said at a conference on Tuesday. The new task force will focus on addressing carbon leakage, carbon dumping, and emissions associated with upstream manufacturing and production, he said, speaking at an event at Columbia University in New York City. The task force development comes as the U.S. is aiming to expand its deployment of clean energy technology and manufacturing domestically amid growing competition from China. Next, we have the top news in metal markets. Gold prices were steady on Wednesday after rallying to record highs last week, as safe haven demand fueled by geopolitical risks in the Middle East partially offset pressure from higher U.S. dollar and Treasury yields. Spot gold held its ground at $2,381.68 per ounce, as of 0337 GMT. After hitting an all-time high of $2,431.29 on Friday. U.S. gold futures fell 0.4% at $2,397.70. The dollar held steady near a 5-month peak, making the greenback-priced bullion less attractive for other currency holders. Benchmark U.S. 10-year Treasury yields were at 4.6591%, hovering near a 5-month high hit in the previous session.
Iron ore futures prices rebounded on Wednesday, helped by an improved steel market in anticipation of a flurry of pre-holiday restocking by steelmakers in top consumer China. The most traded September iron ore contract on China's Dalian Commodity Exchange ended morning trade 0.84% higher at 841 yuan and 50 fen, $116.24 a metric ton. The benchmark May iron ore on the Singapore Exchange was 2.16% higher at $111.75 a ton, as of 0338 GMT. Near-term ore demand will remain solid as mills show increasing willingness to resume production after an improvement in margins and downstream demand, said analysts.
We will now look at the top news in the agricultural sector.
Chicago soybean futures on Wednesday hovered above four-year lows as a strengthening dollar made U.S. exports less competitive in a market well supplied with cheap beans from South America. Wheat and corn were flat after major supplier Ukraine projected a drop in grain production this year, with both contracts near their lowest levels since 2020 due to ample supply. The most active soybean contract on the Chicago Board of Trade was unchanged at $11.45 a bushel by 0302 GMT. But prices have lost about 4% this month and are nearing February's four-year low of $11.29.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.